Good morning, everybody. Welcome to the Steps to Soul podcast. Today, we're talking about major SBA SOP changes, what business brokers and buyers need to know, a conversation with a preferred nationwide SBA lender. So starting with that, we welcome our special guest, Huy Tran with Byline Bank. Christopher, good to see you again as always. For those who don't know what SOP means, that's Standard Operating Procedures. Why do they matter? They guide the SBA guidelines that ensure the loans, and then the lenders have to figure out how to make it all work with our crazy deals sometimes. So before we get started, I want to introduce Huy, let Huy speak a little bit on his background. He's been a preferred lender we've used our groups, Chris, for a long time. He's done many, many deals for us. But Huy, give us a quick little introduction to yourself.
Yeah, thank you guys for welcoming me. So I've been in SBA kind of lending role for the last 6 years here at Byline Bank. Another 4 years at two different banks. Started as a credit analyst and then eventually moved up to become an SBA lender. So spent about 10 years kind of total in the banking side right after I graduate. So this is kind of my breathing life here.
So you've seen it all then after 10 years, or at least enough to know you're still okay being around in this industry, right?
Correct. Been to COVID. That was a
Oh,
tough
yeah.
time with a lot of small businesses, and we paused lending for 6 months. So I haven't seen anything like that before. So, definitely this is like a roller coaster.
Well, for all of us who survived those years and are still here, we know what it
hmm
takes to get it done, and we're ready. But let's dive into, I guess, the most important thing of the day. And I guess I'll let you start with, talk a little about the SBA SOP, the Standard Operating Procedures. We as brokers often have to get to know them pretty well because that informs our deal structure and how we help buyers and sellers navigate pricing a business, selling a business. But dive in a little bit to kind of what the SOP is for those who don't know what it is and kind of give them that, I guess, a broad structure. Why does it matter so much? And why does it matter to you so much?
hmm Yeah, it's a good question. All SBA lenders out there, they have to, like you mentioned, they have to follow, we call it an SOP. It's standard operating procedures. Basically, to us, is like a Bible that contains 450 pages that all SBA lenders kind of in this world have to follow. It really laid out specific 7A program. There's 504 programs in there. The eligibility requirements, source of uses, and procedures that we all have to follow in order for lenders to secure their guarantee with the government. Let's say if something happened with the loan, then they can go to the government, and as long as they follow all these procedures, that they can ask for the guarantee back from the 75% guarantee, typically from the government. So that's why it matters to us. Now, definitely it matters for you guys, in this business acquisition type because it's really laid out, the source of the uses, how it can be used, and what type of business it's going to be eligible for, and how we can structure a certain
Mm-hmm.
seller's note to be counted towards the down payment. So that's what important in the business acquisition side.
Absolutely. So let me ask you to clarify this for a lot of people listening. We know that the SBA insures the loan, but SBA
Mhm.
doesn't make the loan, correct? The lender authorized makes that loan, correct?
Correct. The local lenders do, the lenders that authorize it. Now there are, like I said, preferred lenders and
Mm-hmm.
non-preferred lenders. So preferred lenders, they granted the status that, basically once they approve the deal, as long as they follow all the procedures, they don't have to send it out to the SBA for another approval process versus the preferred lenders, once they underwrite the loans, they go through their credit department, then they still have to send it out to the SBA, to get their blessing. So that's the main difference between them.
How much time do you think y'all save being a preferred lender versus a non-preferred lender? If someone out there is listening, how much time would you save working with someone like yourself versus going through your local community bank that can do an SBA loan, but has to then go through the SBA office to get approval?
I would typically say it's going to be about 2 to 3 weeks generally. Now, of course, you probably been hearing that there's been a cut force in the SBA side, so we don't know how much that would impact
Mm-hmm.
kind of like the SBA side. But actually, with this new recent changes too that they did put in for the SOP, that even for the preferred lenders, there's only two type of scenarios that you can really send it out to the government. Because previously, with the current SOP, as a preferred lenders, you can still able to send in any loans that maybe in the gray area that we don't know if it's going to qualify. you can still able to send it in for the SBA to make sure to get that approval. Now, with the new rule, the only two loans that you can send it out to the SBA would be the international loan program. That with that change, and that would be one of the key that they have to send it out to with the government on that end.
Interesting. I didn't realize that. So let me
Yeah,
ask you this.
yeah.
We've seen a lot of SOP changes over the years. They're typically not done that often. How often do you see them change? Do you see them like yearly? I think it feels like every year and a half to 2 years there's a change, or at least when current administrations change. What do you see? Is it kind of guidelines when these things happen and how buyers should be ready for, hey, if you're planning on doing a deal and it's been about a year and a half since an SOP change came out, get your deal in the works, right?
Yeah, yeah. Typically, actually, the new SOP, it comes and changes every 2 years so often.
Mm-hmm.
But within that 2 year time frame, now once the new SOP comes out, there might be, might be an error or this might be an area that they need more clarification on. So typically what it does is that during that 2 years time frame, SBA may come out with some procedure notice that
Mm-hmm.
would take in effect to, make some that of those small changes to clarify something on the new SOP. So that I could see that happening. But like you said, every 2 years, I would say every 2 years, the new SOP comes out.
Speaking of new SOPs, the new one goes into effect June 1st. We all just found out earlier this week kind of what the guidelines were.
Mhm.
Let's dive into those guidelines because that's kind of the point of the podcast today. And for those listening, it's going to dramatically change deal structure. From what you've heard and seen online the last 2 years, it's a pretty big swing in the pendulum back to the old ways, which some good, some
Mhm.
bad. Let you get your and Chris's take on that because obviously, as brokers, we think some of the rule structure changes are going to hurt some types of sales. But overall, I guess give me the two or three, maybe three biggest real shifts you see that are going to be the most impactful or ones that people should maybe more aware of that, I'll let you kind of highlight those and then we'll kind of, me and Chris will give our 2 cents.
Yeah, yeah, I love to. So I think I would say there's 3 points that I would think it impacted kind of the biz acquisition side. One of them is definitely a partial buyout.
Mm-hmm.
So as you may know, the current SOP allows you to do that buying in less than 100% of the business.
Mm-hmm.
Now with the new SOP that's going to come out, it has to be a stock purchase. So asset purchase is no longer allowed in those type of instances.
Mm-hmm.
The biggest change that I would say is going to be that the seller, even if they hold 1% post acquisitions, they still have to fully guarantee the loan for 2 years, for 2 fiscal years. So
That's going to be tough.
that is going to be tough. Yes, that is going to be tough for a lot of these partial, but that is the new rules that they may see many acquisitions that doesn't make it past 2 years. I think that's why they're putting in this rule that the sellers must guarantee the full loan. And the third component to that partial buy-in is that any minority investors,
Mm-hmm.
especially in the partial buy-in, they have to fully guarantee the loan as well. So
That's a
that
major
is another
change.
key. That is a major change. Yep. Versus 100% buyout.
Hey Huey, so let's talk about. I got a question about the partial buyout and why they're coming up with this SOP, this revised SOP. If you've got any insight on that, or at least your thoughts on it, why are they wanting to change? Where now, if you're not wanting to buy 100%, it has to be a stock purchase rather than an asset. What's the? Is there any reasoning behind that comes along with that information and change?
Good questions, Chris. I think the main key is they do not allow any multi kind of step in the partial change of ownership now,
Mm-hmm.
especially if you're dealing with a business that has a commercial building. Sometimes, and most of the time, you see that the buyer would put the building into the real estate holding company, and
Mm-hmm.
then the business in another separate company. So that structure is fully allowed under 100% buyout of the company, but it just unfortunately they do not allow that for a partial buy-in. So I think that's why they only allow to be as a stock purchase instead of an asset purchase. Not sure why. To be honest with you, that the SBA removed that. I know with the last SOP that it came out, requires only stock purchase, and then about a year in, they
Mm-hmm.
released a procedure that asset purchase was allowed. It's currently allowed, but then with this new SOP, it's revert back to that change. So now we could see that happen, that they might release another procedure that
We
putting
can
back
only
the
hope.
asset purchase. But
Yeah,
yeah.
I didn't know if it was related to they wanting to stop the restart of depreciation on assets or something like that, or maybe they're seeing too much
Hmm.
tax savings or something of that nature. So, but yes, it seems like they haven't given clear guidance why they're making these SOPs. They're just sending them out and telling you we gotta abide by them. But
Hmm.
we've all been through that before.
Yeah, it could be. Yeah, it could well be with any of the tax advantage. But of course, um, we could we could all see. We could all hope for that. Hopefully they put the asset purchase back.
Yeah,
So, Huey,
absolutely.
let me ask you this quick question. Sorry, Chris.
No, you're good.
Normally the minority buyers only had to put up, if you're less than 20%, you didn't have to personally guarantee anything. I'm
Hmm.
surprised they're requiring that. Is that because of the default rate went up, or is that just something they felt like they needed more collateral in the game because of just either defaults, or did you see issues with minority partners buying in and then maybe wanting out right away and being they weren't personally guaranteeing? What I see that as a very big change, because normally the whole point of bringing in minority buyers was to fund a deal and get experience on board without having to personally guarantee, and they destroyed that basically.
Yeah, that's only applied for a partial buy-in. Like I said, with 100% buy-in purchase with the minority owners, they don't have to guarantee the loan. Of
Okay, I
course,
didn't
you can
realize that. I thought it
also.
was everyone. Okay, that's good to know.
So it's just the partial buy-in. So I think that it's still with this new partial buy-in rules. Like Chris was mentioned, they including the seller, they only allow stock purchase now. I think that's why they just, any minority investors coming in, they require that guarantee. I haven't personally seen, most of the loans that I've seen with minority owners being involved. It does help a lot with the experience, and maybe with the down payment that they can help as well. So those are the
Okay.
deals that I've seen has become pretty successful. So.
Okay. Any other rules you think we should kind of highlight? I know a big change was now U.S. citizenship and visas are important. You can't have any outside, non-U.S. parties. I don't mind that. I think that's a good way to keep capital and knowing where it's coming from, what it's being used for. But that
Hmm.
being said, though, talk a little bit about the down payment, because you mentioned that just now. Used to be you could do seller equity injections into the down payment, and that was a big way to help buyers who maybe didn't have 10% down for a $5 million deal, but the owner could equity inject 2.5% of that 10 of the full value of the loan and towards a 10% down. How much does that really change? Do you think that's going to actually slow deals down? Do you think it's actually a good thing that the owners shouldn't be doing that? Do you think that was abused perhaps before?
I think it could well be. It could well be with maybe it was abused a little bit before with the 0% down or 2.5% down from buyers. To me personally, I like that new rules because it does requires the buyer to put skin in the game.
Mm-hmm.
So like you mentioned, the new rule is that they're still keeping the minimum required injection is going to be at 10%. Half of that will have to come from the buyers. The other half can come from a former seller's note. But the note now, it does have to be on a full standby on life of the SBA loan. Which what that means is that the buyers cannot make any payment to the seller note unless they pay off the SBA loan or refinance to a conventional loan. So that is just the tricky part with now
Mm-hmm.
counting that seller's note as part of the down payment.
Mm-hmm.
But as far as on the buyer side, like I mentioned to you, I personally, in my lending experience, I like that to see that buyers going to have to come in, skin in the game in the project.
Yeah.
That's to
Absolutely.
me, it ties the buyer in, and they're not going to be easily walk away from the deal, right? It's not putting, the sellers or the bank in jeopardy. So that to me, I think that's the important part that I like with the changes. But of course, everyone thinking everyone.
Yeah. On the full standby, I have a hard enough time getting my sellers to be on or be on
God,
standby
do
for
we?
2 years. I
Yes.
literally don't think I'll have any seller that's willing to wait 10 years before any payments can be made. I mean, you might as well not even, I don't even think I'll propose that as an option for a buyer coming in that, have you ever seen that, Huey, where somebody's willing to wait 10 years before any kind of payment on their seller note?
And let me add too, does it accrue interest the whole time as well, or is it just is it just sitting there doing nothing?
That I haven't got any clarification yet on that.
That's
It
huge.
can be accrued interest or not. Of course, Nick said you cannot make any payments to the sellers for the full 10 years.
That'd be a hell of a balloon note to
I
inherit.
haven't. Yes, I haven't. I mean, Since the time I've been in lending, I haven't been seeing that on a full standby note. Going back to your point,
Yeah,
Chris.
that's
So to me, I think it's, of course, that's one item that you guys, from the broker side, is gonna have to bring up to be, full transparent with the sellers. But to me, I think it's gonna give us perhaps maybe a smaller pool of buyers, but then it's gonna be a stronger pool of buyers, right?
mm-hmm.
Then they have to bring in the full 10% down, into the deal instead of 5%, because like you mentioned, maybe it's hard for the sellers to swallow that pill and not getting payment for the full 10 years. Now, if you're doing a 25 years loan with a commercial building, well, full 25 years, the seller's not get any paid. That's going to be huge.
So let me ask you this. If the seller does seller finance any part of the deal, but not part of the equity injection, that's still the same full 2-year standby they can make? Have those payments changed at all? Or is that still staying the same as it has for the past few years?
Yeah, no. So if the buyer is able to bring in the full 10% down of the total project cost, then they can always ask for a seller's note. Of course, having the sellers to be involved in the project, but then that seller's note is going to have more flexibility. So you can have a 2-year standby. You can have a no standby at all, depending
Okay.
on the life of the loan. It's all can negotiate it between the buyer and the seller at that point.
Nice.
That's good to hear, because that's always so important, I think, for buyer confidence. And I think for sellers, sometimes it helps with tax mitigation. We've talked about that 100 times, Chris, on the podcast, just ways to structure a deal to make something make sense. Absolutely.
Yes.
So let me ask you this question, Huey. Being these changes came out, Chris and I have talked about this, I think, before in passing, and I'm going to ask your opinion on this too, Chris. Do we need to raise the threshold of the SBA lending capacity? I feel like we're seeing more and more deals, Chris, that are hitting that 5 million threshold, and it's causing problems. You're working one right now that kind of fits in that mold, and you got another one you just listed that it's the perfect example of what the SBA is needed for. But I feel like that floor needs to be, that cap needs to be raised from 5 million to what? 10. I know that's been negotiated amongst our industry, how to use it properly and keep it from being abused by private equity. But Chris and Huey, what do you y'all pick who wants to go? I'll let y'all duel for it, the first answer. But what do you think? I think it's got to be raised at some point, and why that wasn't part of this SOP is surprising to me.
Yeah, Huey, you see more deals than I do come through your pipeline. How many deals are you seeing that maybe they need that above $5 million from Byline? Like, what percentage are you seeing that you kind of have to turn away because they're not within your threshold of lending?
Yeah, I would say roughly about 10 to 20%.
Wow.
That's kind of right in the fairway. As we all know, inflation is rising. Cost of doing business is rising. I think the last time that SBA raised their threshold from 3.5 million to $5 million currently, I think it was back in 2016. I gotta say.
That sounds about right.
Don't hold me against it. Like I said, the SOP changes every 2 years. But I'm hoping that I know that there's been a lot of talks at NAGO. Yeah, I think that's one of the associations that deal with the SBA, the administrators. I know they've been advocating to get that ceiling increase for everyone. So hopefully they've been kind of hearing us out and raising that soon, because as you mentioned, there's a lot of deals that's going to fall right between that, where maybe it's be too small for private equity, but maybe it's too big for SBA. So it's kind of right in that sector.
Good. Let me ask you this question. I know we always talk about healthy financials, right, Christopher? Do not hide the cash. Keep the books straight. I know, Huey, you are a big proponent of that as well. I don't have to even ask you that question, I hope. But I saw the big SOP changes. You can now accept CPA prepared financials or reviewed. I'm kind of surprised. Normally, I always thought it had to be tax returns signed and, filed. How far of a gap do you have to work with that now? Is that like, for example, at the end of say 24 ends, you haven't gotten 24 numbers done. It's like February, March of 25. How far is that gap going to extend? Because in theory, if someone extends their tax returns, corporate returns till October, can you really do a deal with tax returns not filed for 24 in like September? Because I'm the following year, I'm surprised y'all got that much flexibility.
Yeah, that's one of that changes really surprised me as well. I think the specific language you say there is, CPA prepared or reviews are not accepted in lieu of tax returns that are not available, incomplete, or misleading.
Misleading. I'm surprised they put that in writing.
Yeah, misleading.
That
So
sounds like a completely wrong way to write that word. I don't know.
a lot of gray area in the SBA, right? It just really depends on how each SBA lender is going to decipher that, right? Because
Mm-hmm.
SBA, you know, going back to your point, is the bank that is funding these is their money. So banks can always have, the SBA, they have their own rule book, but banks can always have their own credit policy that they have to follow
Mm-hmm.
as well. So
Yes.
that's two different things. I mean, banks can be more stricter. They can put more stringent component on top of the SBA, or there may be banks out there that can mirror what the SBA allow them to do, right?
Mm-hmm.
So it creates this gray area. A lot of banks they can decipher one way or the
Mm-hmm.
other. To me, I think this component really help our carve out deals. So businesses
Mm-hmm.
that are sold in sectors that are combined in one tax return. So maybe then we can verify the top line revenue, but then now it allows us to utilize our preferred lending status. We can look into CPA prepared financial or review to verify those top line revenue and expenses. So I think that helps as far as on those carve out deals that I have seen. But as far as, maybe if they're selling the whole business, to me, I'm still gonna able to, get to collect the tax return and make sure that,
Absolutely.
okay, if there's any recasts or any add back, I've been
Mm-hmm.
able to prove that out, and reason it out. So that's as far as on my lending end perspective. So.
That's what kind of I thought the taste was going to be. Because I was going to say, how can you take a business that should have a tax return for 24 right now and not submit it and sell it in September? I mean, I could see you said carve out makes total sense. You're breaking up maybe a maintenance versus a construction side of a construction company. That's like
Mhm.
a service company. That makes total sense to have the CPA break out the costs and all that. That was what really surprised me. Besides the changes to the down payment and the seller finance components, I was like,
Mhm.
wow. Because typically, I would think the SBA wants to cover. I mean, Chris, you can add to this conventional loan versus an SBA loan. The paperwork for the financial trail is unbelievable compared to a conventional loan. Am I wrong? I mean,
No, no, not at all. And going back to Huey said he thinks that a non-preferred lender takes 2 to 3 weeks longer. You and I have the experience that it takes 4 to 5 months longer when you're not
yes,
when you're not using a preferred lender, which we never advise. But we've had
correct.
buyers come in that want to use some bank that does SBA loans, but they don't do them regularly, like Byline or any of the other top banks. And yeah,
Mm-hmm.
it just drags on for months and months.
Not all banks are equal. And Huey, I know you know that. We're not going to pat you on the back,
Mhm.
but you deserve that one. It's true. It's true. And as brokers, we always encourage our clients to talk to a couple lenders and have an understanding of what's out there.
Right.
But I think sometimes people get too caught up in there's nothing wrong with a local relationship. But if that bank does not have an SBA department that's preferred, you're walking into a backroom nightmare. They're going I mean, we know how in email games we have to send, we're looking for financials. I know y'all don't want to, but you have to cover your basis. And that allows us the credit flexibility of 10% down to buy a great business. Let
Agree.
me ask you
Yeah.
this. We've kind of talked about the SOPs and the big changes. We're not going to go line item by line item. I know you suggested earlier that brokers can download a book or go to the SOP book and kind of down and read it and be familiar. What do you think? Now we kind of talked about the rules. What changes do you think are going to mean the most? I know we kind of hinted at that topic, but what do you think is really going to affect 25? Do you think these are going to be any of these changes you see being applied now are going to be redacted within a year? Do you think it's going to increase deal flow for y'all? You think it's going to, I mean, obviously it might decrease deal flow for some of the outline. We talked about the lingering buyers don't have the capital. Do you think this actually will help the SBA and help y'all be more effective and turn deal time around versus having an overflow of deals you can't maybe get done because they're stretched too thin to a bigger core group of deals that your back of house, your underwriting can actually process, right? Chris, how often do we see there's 100 deals going on and like Hugh, you can test your back room is just slammed.
Mhm.
Is this actually going to make it better for the consumer?
Yeah, it's hard to tell. I think we're living in this year where there's a lot of turbulence with the new administrative and with all these changes in the rule, abrupt changes too, right?
Mm-hmm.
I think 2 months ago there was a change, the procedure notice and effect where SBA decided to raise the guarantee fee, where previously, a million
Mm-hmm.
dollar deal where there's 0% guaranteed fee. So that really helps a lot of small business owners, able
Yes.
to easily access to lending without having to pay these, government guarantee fee. It could be, 3 or 3.5% of
It's a lot of
75%
money when you
guarantee
add it
amount.
up.
It is a lot of money. So those abrupt changes came in and it taken effect, I think it literally in a week that taken effect. So it did throw a lot of curveball for a lot of deals that are less than $1 million, for
Mm-hmm.
people who have to scramble around at that point. So to me, I think as far as, going back to the point, maybe, am I going to see less deals in the biz acquisition side? Because, maybe, yes, I would say, but we're going to see a stronger pool of buyers that are going to have to come in with more down payment and more kind of more equity in the games now, that can be vested, more qualified buyers, I would say. As far as from my lending perspective, I've just always been upheld with that rule that buyers going to have to come in with some skin in the game. So I really, throughout the last 2 years, I really haven't seen or haven't done much where
Mm-hmm.
new buyers with no experience in the industry,
Mm-hmm.
or not a lot of collateral, and wants to buy a business with 0 or 2% down, maybe using all that money from investors. I always personally, I have turned around and turned away those deals.
Mm-hmm.
To me, I don't know. I don't think that my lending criteria is going to change much, but it could impact the pool out there. Maybe the benefits that's going to bring is you probably been hearing that the SBA default rate has been rising for the last 3 to 4 years. Maybe it helps kind of tamper down this
Mm-hmm.
default rate with restricting the rules, because these rules were in effect. It's not anything new. I mean, most of the rules were old rules, so I think they're just
Mm-hmm.
reverting that back now. Maybe because, let's see, one of the reasons could be that the default rate has been kind of rising for the last 3 to 4 years.
Touch on that a little bit. How high has it gotten, and what do you think caused those defaults? Because I think that's a big debate amongst brokers. Was it deal structure? Was it inflation? Was it just
Hmm.
cost of goods going up? Because I think Chris, we can talk about this a lot. How many buyers just get worried about psychologically pulling the trigger? What could go wrong? We have to talk about the fear of I'm leveraging a lot and I could lose everything. So, Huey, talk. What do you think causes those default rates, or is that something people should still be concerned about, or do you think it's starting to the wave is tapering off?
Yeah, in the business acquisition space, to me, I've seen deals that didn't go the right way, maybe perhaps at the time of the transition, right?
Mm-hmm.
Perhaps if buyers or sellers or buyers rushing through the process and then not having an attorney to review their purchase agreement, make sure that they, put
Are
in
you
all the
serious?
warranty and specs. Yeah, I have seen some deals that they just wanted to rush through, and of course, the buyers come in
Oh
with
my goodness.
regret after. Yeah, okay, well, why didn't I think about this, right? So I would say, take your time going through the process. Get professional, opinion on, hire a good attorney, hire a good CPA, reviewing
Yes.
those books, going through those changes, and think about the transitions. Make sure some of the key employees within the business, or you make sure you want to um, incentivize them to stay with you post closing, right?
Mm-hmm.
That's another big key that I've seen where it could really jeopardize the business if one or two of those key employees leave the business. So think about those post acquisition plan ahead of time, and I think that really would help as far as not having those loans to go south. So that's, to me, that's what I've seen in a lot of the business acquisition space. Of course, there's SBA, you can utilize it for startup business, anything else outside of that, outside of biz acquisition. So it could have been a lot with, many startup businesses,
Mm-hmm.
maybe the COVID time it's catching up. There's a lag between the COVID time. As you may
Mm-hmm.
know, there's a lot of money, free money from the SBA, from the government that we're giving
Yes.
out. Maybe it could delay the timing of those businesses that, okay, well,
Mm-hmm.
they survive through a couple of years, and after they run out of the money, well, then you can see that trickling in with not able to manage your business properly. So that could maybe be due to a factor of COVID.
Yep.
Yeah,
That
I think
artificial money.
a lot has to do with interest rates though, because what are you locked in when you get an SBA loan for the first 12 months at least? Huey, is that correct, or
Yeah,
what's
rate
your
is
interest?
is it's definitely, I think, is one of the area too. Currently, uh, a lot of SBA lenders kind of base their rate on Wall Street Journal Prime. So
Right.
prime
Mm-hmm.
has ticked up from, I think, what, 3.5%, I would say 3 years ago, to all the way
Mm-hmm.
to, I think the highest that they got is like 8.25. Recently, it's just
So
dropped
you're
down to
talking 10,
seven and a
11%
half percent.
interest.
So you
But when
talk
you get an
about the
SBA loan,
increase.
yeah, but when you get an SBA loan, isn't it locked in for at least 12 months? It doesn't start changing in
Mm-hmm.
the first year, I believe. Is that correct?
So that really depends on the lenders and how they
Okay.
structure the pricing.
Okay.
But
Yeah.
for me personally, I've seen a lot where that's just their rate quarterly.
Mm-hmm.
So
Yeah. Quarter.
they probably lock in a quarter, and then if the next quarter, if Wall Street Journal break prime changes, then your rate is going to be effective for the next quarter, and that change is going to be in effect.
Mm-hmm.
Yeah, I know for me personally, I had an SBA loan. I got back in 2016. I stayed locked in for maybe a year, maybe even 2 years. It was on commercial and
Mhm.
equipment. But yeah, it's good to know that a lot of banks just change with the prime, whatever it is, quarterly. But I think that was a big part of it. Is a lot of people got loans during COVID. They were 3.5% prime rate, like you said. Next thing I know, my commercial buildings went up to 10% interest rate. It got a little weird there for a while. Got pretty monthly payments were really high, and luckily got a great business to support that. But yeah, if you had a business with tighter margins or
Yep,
not so much
Mm-hmm.
cash flow, I can
not so much
completely
cash.
see a lot of loans defaulting through that.
Yeah, I mean 3 to 4% increase. Yeah, you can definitely if your business, if you're not reserving cash for rainy days, and you live month by month, that could really, really hurt your business as you see, 3 to 4% increase. So 100%, I agree.
That's been our biggest fear. Me and Chris looked at doing a deal, and we had to look at that interest rate and say, if it goes up, that's what's the return on investment, right? That it gets tough when you start looking at 10, 11, 12%. And for a while there, it was just ticking up and it made you sweat a little.
Yeah,
Let me
and
ask you this,
how
Huey.
we underwrite it based on the stress scenario as well. So we do stress that
Yeah.
out. What if the rate's going to increase 1 or 2%? What if revenue is going to fall 50% or below? Can you still sustain at that level for that loan
Mm-hmm.
amount? So we do stress that out. But of course, the reality might be different, but that's up to the buyers to, how they want to handle that stress and build that reserve. So, one of the good things too that comes with changes, maybe those qualified buyers gonna have well capitalized, right? They're gonna have
Mm-hmm.
post liquidity to reserve and not just using all their money to put it for a down payment and just doesn't have much on post liquidity left. So that's one of the area that I do look at, and I do like buyers that with have that maybe 5 to 10% post liquidity afterwards.
Can you give us a good real life example, or at least a hypothetical of a situation where the old SOP now would not be applicable? I know Chris and I talked about the biggest thing we saw with the SOP change was specifically licensing with certain businesses like HVAC,
Hmm.
electrical, plumbing, maybe restoration, ones like that where the buyer really wants to buy it, but doesn't have the license. Have you had any ones like that where this is really going to kind of change how we structure those deals and what we can do differently?
Yeah, that's funny that you touch on those industry because I definitely do have one right now. Is a restoration acquisition space, right? Certain states,
Okay.
require the buyers to have that construction licensing to do some of the reconstructive works in the restoration side. Buyer and seller, they structure that deal where it's going to be a partial buy-in. Seller is holding,
Mm-hmm.
10% of the ownership. They also, I think in this case, my seller
Mm-hmm.
is actually willing to limit a guarantee. Limited guarantee is not fully guaranteed. It's limited to the loan amount, just
Mm-hmm.
5 or 10% based on his ownership. But what it does is that, okay,
Very nice
one,
of him.
yeah, very nice of him, right? But one, it does
I haven't
allow.
seen that before.
No, I haven't. So I think that there's a good synergies going on between the buyer and the seller, and I like that part too. Everyone is very transparent. Even he's
Mm-hmm.
willing to kind of help this buyer here. Because the buyers, he didn't come, he has a really good finance background. Of course, got a pretty healthy personal financial statements ranked too as well, but he doesn't have that direct industry experience in the restoration side, nor does he have the licensing to do it. And with the rule with the SBAs, you have to have obtained that licensing within 90 days after post closing. this constructive license or the general contractor license, you're not going to be able to get that within 90 days. So that's how they structure that deal partial as a partial buy-in. That to me, if this new SOP would be effective in 6/1, well, now the seller is going to have to fully guarantee the loan for full 2 years, which to me, I think that would really eliminate that angle for doing a partial buy-in.
Man, that's brutal. And that's not fair to the owner, right, Chris? I mean, think about that. You've got a competent person coming in. Just because I can't get a license in 90 days means you can't sell your company. I feel like that's almost handicapping sellers. Wouldn't you say so? I mean, how would you feel if you're trying to sell your business and you got jammed up?
I don't know any sellers that are going to stick around and fully guarantee the whole loan just to cover that 90 days. That seems unlikely to happen. You and I talk to sellers all the time. I've never met one that would probably go along with that.
Do you think, Chris, it'll kill values of businesses or hurt them somewhat? Because imagine if before it kind of opened up the pedestal for a lot of people to come in and get in those industries. Now you're telling them can't get into it. So does that affect the multiples we've talked about? Because now you've limited the buyer pool, and that's going to hurt the ability to market the business, unfortunately.
We're definitely going to have to go back to the drawing board and figure out ways to get creative again, right? We got to not to find loopholes or anything like that, but kind of is really. We've got to figure out a way to get these businesses sold without losing huge value for our sellers. But how do we bridge that gap? I don't think we fully know yet.
I think the early answer would be if you've got a key employee that can get a license, get them licensed right now if you're listening, because you're going to need that key employee, like Huey said, for deal structure, but also to maintain that so you can be fully bought out and not have to guarantee anything. Because if not, you're looking at only a strategic buyer, and that's going to hinder your ability to sell.
Yeah,
so that's a really good story, Huey. Thank you for sharing that. I wouldn't have thought that would be that big an issue, but you're right. 90 days is all you got. That's not that long, really. In some of these bureaucracies today, that's a pipe dream.
Yeah, 90 days.
So you gave us a good anecdote story. Give us. No, it's not. I mean, let me ask you this. You work with a lot of brokers too, guys like Chris and myself who know how to kind of structure deals. We help set the seller expectations early on. What are some tips you would say right now, especially when looking at structure, even if maybe not using a broker, maybe you're an independent buyer looking to buy a business? What are some deals, some tricks you would tell them to help streamline the SBA process, or things you say, if you're going to do it right? Maybe ad backs, for example, or financials. Let's start there, where tricks of the trade, you'd say, hey, for those of you listening, take notes right here, that this is what he's going to want and what you're going to need. Give us some insight there.
I've worked with, like I said, others, business brokers, but I've seen the one that very successful is they keep their file very organized with the recast and the add backs that they wanted to show to the bank. Because, especially my bank, if we're gonna consider any personal add back into the business, we do require proof that paid invoices and explanation why those are not going to be related to the business, and that's not going to incur for the new buyers. So I would focus on maybe some bigger add backs instead of really nitty picking $1,000 or $2,000 in meals, because it's going to be hard for you to really justify that, right, or prove that out for the recast. And I think the other thing is, set the right expectations. Going back to, Chris' point, no seller is going to be willing to do a full standby on a seller's note. So you got to make sure that, if there is going to be seller's note that is not counted towards the 10% rule, well, of course, you try to get some feedback from the banks that they're using. Okay, what are the right expectation for those terms that bank is going to require that seller's note to have? I think, setting that right expectation and the amount of the seller's note can really help the sellers to understand that and willing to accept that on the front end. So, those are the point that I do see kind of help streamlining the whole process. And for me on my end is I always help, the sellers or the broker prepare them. Okay, these are the lists of, items that we're going to need for clothing. If they're going to need any special licensing, any tax clearance letter, I also try to get them ahead of time. So I always give them a list of homework to do during underwriting so that they know that they're going to have to get these items in closing. So I always say just, staying on top of that and helping with the communications.
Yes.
That really, really helps.
That's so important. How many times, Chris, have we seen buyers and sellers both kind of filly fart around with getting stuff prepared and see a loan go from 60 days closing timeline to 120. Am I
Too
wrong?
many to count.
Too many indeed.
To me, it's a three-legged stool,
Let me ask you
right?
this, Huey.
So, go
Yeah.
ahead, friend. I was gonna say this.
No, you're good.
In the acquisition space, it's a three-legged stool, right? I mean, all sellers, buyer, bankers, they gotta work together to get it done. So if
Mhm.
one pillar is not working well, the banking or the buyers, they cannot, get it done. So they all have to work together, all have to be transparent and communicate with each others. I think that really helps
Mhm.
speed up the process.
Absolutely. And we talked about, recasting, and you mentioned that
Mhm.
too. Add backs is a word that everybody's kind of heard, but I mean, I've seen it applied a dime a dozen. Chris, what do you consider legit add backs? And Huey, I'll let you piggyback off Chris is done. Kind of what you
Mhm.
consider are real add backs and ones that the bank will consider. And by the way, for those listening, I'm going to say it right now. Cash component is not an add back. Chris, you can take it from here. I've made my peace.
Yeah, cash is definitely not an add back. I get a lot of sellers. I ask them what their salary is, and I get an answer, and then we start inspecting the P&Ls, and it's not there, and it's because they're
Mhm.
thinking of draws and distributions. If it didn't flow through the profit and loss, it's not an add back. So that's a big one. And I love what Huey just said is don't sit there and count the little ones, the little fuel, the little time you went to Home Depot and spent $50, and it was even if it was for personal, because now you got to justify it. We got to bring that receipt in. 4 people have to look at it, and then everybody's got to trust that it wasn't for a legitimate business purpose. So I'd say salary. If you got health insurance that you can verify, life insurance that is right to the owner, any big expenses like that. But yeah, I've stopped asking about. I used to ask about fuel and other little expenses, but yeah,
Travel.
yeah, exactly. It's if it's on the P&L, it's if it's a business that travels, yeah, it could be for your personal, but now we've got to convince bankers, we've got to convince the buyer, and it's just a fight you don't want to have to even have.
100% agree, Chris. I've seen a lot too where non-family members are not active in the business. Yes, I mean,
That's a
we
good one.
can season it out and prove it out with the W-2, and they're not involved in an active role in the business, or maybe have a small role, but you can really easily replace with a cheaper
Mhm.
labor cost instead of paying an accountant. I've seen cases where the wife was an accountant and she had paid $150,000 or $200,000. Well, in real life, you're not going to pay an accountant and in a bookkeeper $150,000, with the company. So I've seen that a lot too. Um, and with travel, I've done, I have had back travels, but in a business that doesn't need travel, then I can easily, present that
Mhm.
to my approvers versus a business that always have to be a cost and travel. Well, maybe it's not easy to decipher that.
Is there any guidance from the SOP on add backs? I don't think I've ever seen that, but is there anything like that in the SOP for how you calculate or what is defined as an add back for y'all?
No, it does not. So the SBA, they never really opine or have their opinion on that as an add
Okay.
back. So they really up to banks with their bank policy procedure,
Mm-hmm.
right? But now that
Interesting. I
maybe
never.
switching back now along the CPA prepare financials, well, maybe certain banks will utilize that instead of using it as a tax
Mhm.
returns to me.
That's interesting. I never thought of it like that.
So Huey, if somebody's got a deal that they're wanting to get done, maybe it's not even going to get done before the June 1st deadline, but they're wanting to get it in under the current SOP guidelines. What do they need to do with you, or how soon do you need to get something done with them? Even if the deal wasn't going to close, maybe it's not going to close till October, November. But what has to happen internally in your department at Byline to get the deal locked in under the old guidelines?
Yeah, good question. So I think in my department, you would have the sooner that the buyers submit in the applications, we'll go through the underwriting process. As we know that 6/1 is the deadline. So, the underwriting is going to take 2 to 3 weeks. So the sooner that you get through the underwriting process, once the loan is approved at our bank committee, then we can secure and pull the SBA loan numbers right away. So as long as we pull and secure the PLP numbers before 6/1, then you're locked into the current SOP.
So is it
We're
safe to
running out of
say
time.
like a
Hmm.
month is kind of like a month from that date? So like the end of the
Yeah, but
end of
they'd have to get it in the
oh,
next. They'd have to get it in the next
week or two, right?
The next
Yeah,
week
he
or
takes
two.
2 to 3 weeks.
Ooh, that's tight. Well, those of you out there listening, hurry up. Now, call Huey, start the process.
Yeah.
Yes.
Everybody call Huey
We got to
today.
start the process, right?
After the podcast, call him. Don't interrupt us again. We're good. We're rolling. So we're getting kind of close. We've covered so many of the great topics, but I guess I got one more for you that I think we haven't. It's not part of the SOP, but I guess it has been in the past. But I think I'd love for you to touch on is y'all don't just help with capital to buy the business. Don't you talk about what else y'all can loan on as part of the deal? I know me and Chris tell people all the time there's more than just the business loan. There's closing costs, there's working capital. What else can y'all build into that package? And is any of that changed with the SOP now? Where is it still the same lending regulations for that working capital, for that closing cost? Is that going to change, or is that being left the same? Because that's also important for a lot of buyers you deal with where they can't afford to have just a straight full working capital loan day one. They need help with that to get started too. If not, we got to factor in working capital to the price of the business and what's being left behind.
Correct. So one of the factors that they did just adding to this new SOP that, when 50% or more of the loan proceed will be used for working capital, the lender has to explain it in the credit and why it's necessary and appropriate for the business. So in any instances, buyer comes to me and asking for, three or $500,000 in working capital. I always ask the buyer, well, why do you need that? Lay it out specific uses that you're going to need it. I would say go back to the seller and ask, looking through the cash flow cycle, really how much are you going to need that for 2 to 3 months of working capital, right? Because at the end of the day, only sellers would really understand his business and his cash flow cycles, right? I always ask the seller the question, well, do you have a line of credit right now? How much line of credit are you using? That really gives me the indication, okay, how much of this business is, how much cash is this business going to need? And we do work to that working capital adequacy as part of our bank underwriting too, that we do include that as well. But going back to your question, yes, the loan can be used to buy another piece of equipment as well. But I'm doing a deal right now where it's an acquisition of a dry cleaning stores. Then the buyer wants to replace all the equipment kind of inside to really help streamline the process and avoid outsourcing a lot of those work. Well, I'm able to throw in the equipment financing piece as part of that acquisition as well. So it can be used for those purposes. So those are the point that I would say. Now, I think we didn't touch on a point where with franchise lending. So I don't know if you guys may know, SBA, they are bringing back the SBA franchise registry.
Really?
Yes,
okay.
they are.
That is
yeah. What that means is that if you are working on an acquisition or listing for a franchise, starting effect now, they do give you, SBA does give you a grace period. I believe it's until July. So it's not 6/1, but it does give you a month or two grace period where if you're working with a franchise, make sure that the sellers, that franchise is going to be registered back on the SBA franchise registry.
interesting.
So, so they took that away 2 years ago, where it's up to the bank to review those franchise agreement and make sure that it's actually a franchise, not having any control.
Licensing agreement.
Now, it's back. So
interesting. Those are some big FTDs to read. That's going to be fun for y'all going through all those.
They go through the FTD. Yes.
But yeah, we've seen some big ones.
So,
Chris, you got anything else you want to ask? Anything big you want to hit on? Any topics you've got concerns or questions? I think Huey's done a great job answering them, but
I think he's covered everything on the SOP. Got a much better understanding for me personally, and I hope everybody listening does as well. And hit on a few more topics. So, Huey, really appreciate your time today. Can't express that enough. Great insights. Always great working with you, and yeah, we appreciate your time very much.
Thank you.
Well, real quick before you go, Huey, give everybody your phone number and email if you don't mind. Make sure they can contact you because we trust you with a lot of our deals. You've done a great job for us over the years, and we can rely on you. Let's let everybody else know where they can find you.
Yeah, reach out to myself from 20475-1152. Again, it's 920-475-1152. I know that Chris and Brandon are always able to get a hold of me. I'm pretty easy to get accessible to, even on weekends.
Absolutely.
Even I'm traveling. So just give me a call, text me if you guys have any question on the new SOP. More than happy to help.
Absolutely. And we will post your contact information in the post as well. So everybody who's looking or listening, we will make sure you can get in touch with Huey if you have any questions on SBA lending, because he is one of our guys we trust emphatically. And on that note, Huey, thank you for being here. Chris, thank you as well. This is Steps to Soul Podcast. We will see y'all next week. And thank you for tuning in for our emergency session. Y'all have a
All
good
right.
one.
Thank you guys. Bye-bye.
Take care.